A shock move by the Reserve Bank. The board has announced an increase of 25 basis points, lifting rates to 3.85%. That pushes the cash rate to an 11-year high and the 11th increase in the space of 12 months. Most analysts, even the big four banks, had expected the RBA to keep rates on hold.
I think that the rate rise is really a pretty stark, pretty brutal reminder of the difficult economic conditions that we confront as we finalise the budget.
And Economist Chris Richardson joins us now. Chris, a lot of economists were shocked by this news. Did you see it coming?
I'd like to say I did, but it was a bit of a shock, not just to economists, but to markets. And a shock is a problem. We just had a review of the Reserve Bank that said it needs to communicate better. But today it again communicated, with all the sensitivity of a teaspoon, basically. You don't want to surprise Australians when they've never borrowed as much as this and when you've had as big an increase in interest rates as we've had.
I know what you're saying, but I feel like I've known some very sensitive teaspoons. We've heard, though, over the period of last probably, month, that inflation's slowing, which I guess is encouraging. Does the fact that the rate has gone up today mean that inflation actually isn't under control?
No. So inflation is slowing. It's slowing in Australia. The fight against inflation is a world fight. It's being won all around the world, and the rest of the world is 3 or 6 months ahead of us. So, there's a lot of good news in the pipeline for inflation. To be fair to the Reserve Bank, though, it is still way above where the bank promises the Australian people it will average over time. They're worried that inflation is popping up in some new areas. It's a bit like a bushfire, so they worry more when it does that. So they've given one more swing of the baseball bat.
Times are really tough at the moment for so many people, Chris. Do you think that there's some positive news in this? Have we finally seen the end of this series of hikes?
I would say yes. I think the Reserve Bank is now done and dusted. At the very least, it has changed the cost of money, interest rates, so much and so fast that it should pause for some time while it sees what's happening. You remember, the Australian economy is only beginning to slow as a result of these interest rate rises. We know almost 1 million loans at cheap rates taken out during COVID. They'll reset as people have to go to refinance them. That says the Reserve Bank waits and watches from here and is probably done.
What are they waiting for, Chris? Are we going to see some budget relief or some kind of help for homeowners next week in the budget? Do you think there's any coming?
There'll be a bit, and we've been hearing the leaks, older job seekers, something for single mothers we've known for a while around help for electricity bills. By and large, though, there's not big bucks in that. And the real problem for a government that has a population worried about a cost of living crisis is the government gives us too much money, we'll spend it, and that creates more inflation. And that brings the Reserve Bank back off the bench. So the government will do what it can, but chances are it's not going to be big.
Chris, thanks so much for your time.
Thanks.